Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to cover Starbucks, but before we get into the video, if you could do me a favor, hit that notification bell so you are notified whenever I upload any future content, and most importantly, subscribe to the channel. If you like dividend growth investing, dividend stocks, investing in general, this is the channel for you. So hit that subscribe button and hit the notification bell so that you don't miss any future videos. If you do find any value in the video or you appreciate and like the content, drop a comment below and let me know what you think. With that said, let's jump right into the video. So as we said, we are going to cover Starbucks. Their heritage began in 1971 along with the cobblestone streets of Seattle's historic Pike Place Market. It was where the Starbucks opened its first store, offering fresh roasted coffee beans, tea, and spices from around the world for our customers to take home. Our name was inspired by the classic tale Moby Dick, evoking the seafaring tradition of the early coffee traders. 10 years later, a young New Yorker named Howard Schultz would walk through these doors and become captivated with Starbucks coffee from his first sip. After joining the company in 1982, a different cobblestone road would lead him to another discovery. It was on a trip to Milan in 1983 that Howard first experienced Italy's coffee houses, and he returned to Seattle inspired to bring back warmth and artistry of its coffee culture to Starbucks. By 1987, we swapped our brown aprons for green ones and embarked on our next chapter as a coffee house. And the rest, as they say, is history. They are all over the world. They are all over the United States. Again, unless you've lived under a rock, lived in your closet for the last several years, you are aware of what Starbucks is, what they do, and what they serve. If you want to know more, go check them out at www.starbucks.com. As you can see, at the close of business on June 8th, Starbucks Corporation, ticker SBUX, closed at $78.47. They were down 1.26% on the day. 52-week range as low as $68.39, as high as $126.32. So they are definitely closer to the low, but looks like not at the low. Their 52-week range, I'd love them closer to this $68 range, but even at $78.47, they are attractively valued. I wouldn't say that they are in my buy range, but definitely getting closer. One I am watching to add to my portfolio when it does hit my buy range. Again, I'd love them under 70. Market cap of $89.997 billion, a beta of 0.97, so it is more volatile than the overall market. As you can see here, was over 79, almost 79.50, $80 on the day, dropped down to 78.47 to end the day. PE ratio of 20.93. This is part of the reason I don't necessarily like them. I know they are a growing company still, but they are not growing as fast as they used to. They also have some headwinds. Some of their locations are trying to unionize currently, so that may impact them as well. That is a small portion of their overall stores, so not really a huge issue, and I don't believe unionization is that big of an issue anyway. I was in a union once upon a time. My dad was in the masonry union for over 30 years, so unions are not the evil entity that some people like to portray them as. They are just workers, who have chosen to unionize to get better wages and better wages, better benefits, and a better lifestyle. They do have a forward dividend of $1.96 paid out quarterly, so divide by 4, that'll tell you what you're paid out quarterly. A yield of 2.47%, so pretty nice yield. Ex-dividend date, their last one was May 12th, so you wouldn't get the next dividend if you bought them now. 1 year estimate target for, at least according to Yahoo Finance, $94.40 per share, so definitely speaks to some upside appreciation in stock price. According to the 42 analysts that have taken a look at this information brought to you by stockanalysis.com, not affiliated with them or Yahoo Finance, where I pulled the other information from on the previous slide. According to the 42 stock analysts they have that have taken a look at it, they call it a buy, consensus buy. They do have a low estimate of $65.65. That would be a 16% decline from where it currently sits. And again, if it hit down here in these $65 range below 70, I would be a buyer. Has an average of $96.29, similar to what Yahoo Finance showed there for their 1 year estimated target, and that would be a 22.71% upside. And a high target of $142.80, which would be 81.98% upside. That seems significantly higher than what I would have them at. But hey, if they hit that, that'd be great for those who currently hold them or those who are looking to invest in them at these prices. Again, to me, under 70 would be a buy. Right now, 78.47. There's worse stocks to be in, but I believe there's also better ones currently as well. So I will continue to watch this. You do your own due diligence, find your price point, what you're willing to pay, and then jump in if you're interested, or add it to your watch list, or continue to wait for further pullbacks. These are quick hitters, guys. I'm trying to bring you value where I see it in the market. There was a lot of red today. This is one that I thought, again, down 1.26%, definitely closer to fair value, even at fair value for a lot of for this company anyway. Does trade at a higher multiple than normal, so 20 isn't terrible for a PE for this company compared to its historical norms. Just like I said, a little higher for me. I would prefer to just continue to add to some existing positions and continue to build those out at the current prices and wait for this to pull back further. But again, do your own due diligence. That really wraps up this one, guys. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. I do personally read and respond to the comments. Always interested to read your questions, opinions, suggestions for future topics, future stocks to cover, or criticisms. If you have criticisms to drop down below, go ahead and do that as well. I'll read those as well. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time, guys. Thanks for stopping by. Hope you're having a great week. Going to wrap it up here over the next couple of days. One more stock pick of the day tomorrow on Thursday, and then we'll head into the weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.